Hey YouTube, this is Zach with Achilles Financial, and we are back with another video for this beautiful Memorial Day weekend. And I wanted to walk through some of the differences between stocks and options and how you can utilize options to augment your portfolio. The first thing I'd ask is, as I'm making these videos and you find the content helpful, please leave a like and subscribe. Thanks. So for stocks versus options, I think everyone has a pretty good understanding of, at least if you are utilizing this platform, what stocks are and how they can be utilized. One of the greatest benefits for options or stocks is that they are what's classified as an equity. So they provide value even if the value goes up and down. So if you hold a share of Intel stock, a chip maker, if you hold it at $67.46 or if you hold it at $45.83, you still own a share of Intel stock. So what does that mean? It means that you have partial ownership of the company of Intel, depending on the amount or the caliber or the preference of the type of stock that you own, whether it's a preferred share, whether it's a common stock. However, you do own a piece of that company, so that stock can change in value, and the only way that it would go away is if you sold it or if the company was purchased, and that would be rolled, either you would be bought out or it would be rolled into a different stock. So what does this mean in terms of how you can augment your portfolio? A lot of people who are investing in stocks are going to purchase a stock that has a dividend if they're looking for steady, consistent income, or they're going to be purchasing it looking for growth. So you can see that over the past year, Intel stock actually has returned 43.53%. Not bad at all. Over the past 5 years, it's been 88.75%. So if you had owned Intel stock during this time period, you would have nearly doubled your money. Now, if you are looking to get into the world of stock trading, I think that buying and selling stocks, or realistically just purchasing and holding it for the long term, is the best case scenario. However, if you've been doing that for a while and you're looking, hey, I have an extra couple $100 that I'm looking to play some of the volatility in the current market, what can I do? So you have the capability of trading options as well. So I'm going to look at the two options that I have right here for Intel. That is the 7250 calls in the middle of July. So as you can see here, we actually have the value similar to what we just saw going up and down. So I purchased these at $50 a contract, and you can see that it has gone up and down. It's been as high as 56. It's been as low as 18. So it'll continue to go up and down just like a stock does. However, the key difference here for an option is not the same equity caliber that a stock is. And what I mean by that is, if on July 17 of 2020, if this contract expires and the stock is not higher than $72.50, this will expire worthless. We are going to see this $37 go down to zero. So one of the ways that you can actually lose a lot of money trading options is by trading an option and the stock doesn't go the right direction and it expires. This is one of the reasons why I tend to have longer term options and play the momentum trade. So for example, if you're buying in here, as you see it start to uptick and you sell here, yes, you're going to miss out on some of this momentum trade, but you're also not necessarily going to lose money when it expires by the end of the week, if that were to be the case. So one of the key items that you can do with options is, if you have 10%, 20% of your portfolio that's currently sitting in cash, you can actually make bets by going to the different options trees that you see here and saying, where do I think the stock is going to end up? So if I'd like to look at some of the longer ones, the July 17th, if you said that the stock was going to be higher than 62.50, you can see that there's actually a decent amount of premium that has been priced in to have it a higher level than that. So there's a lot of different ways that you can utilize calls and puts to augment your portfolio depending on where you anticipate the stock to go. However, the key item here, the key advantage that we see here on the screen, is that you can play these stocks with a lot more, or rather a lot less money than if you were to buy even as many as 5 shares. If, for example, by July 17th, you thought that the stock was going to be under $55 a share, it would cost you $102. And then I could buy and sell that option. This is compared to actually playing the Intel stock, where that wouldn't even be a full 2 shares. So there's a lot of different ways that you can utilize options to augment your portfolio. I highly recommend it. I would not throw in a ton of money just to throw it in there. I would utilize some of the tips that I've used in this other video that I'll link in the top right hand corner, and I would go and I'd check that out, see what you can do there. And after you've listened to that video, I would start trading some options, because they're a great way to augment your portfolio and get some excess cash on the side, even if you're just holding on to stocks long term. So check it out. And if you found this video helpful, please leave a like and subscribe. Thanks everyone. Talk to you later. Bye.